Last week in the markets was wild, and if what I'm seeing on the charts is right, things could be about to get even more volatile. Stick around because we have a lot to cover. Nothing I'm about to share is financial advice, so please seek out a licensed financial advisor before making any financial decisions. Let's kick things off with the smaller time frames for SPY and QQQ, and then let's move up. So on SPY, forming into the end of the day, we see this very clearly defined rising wedge pattern with a potential breakdown target of somewhere around 588 to 588.50. And we saw the same pattern form on QQQ. The breakdown target for that was somewhere around like 515. And I think adding even a little bit more confluence to this is we had a bit of a rising wedge on the ADD as well, forming right up into the end of the day. But we can't look at patterns in isolation. We have to take sentiment into consideration. So as I had previously shared, here in blue is what looked like the lower support line, and then this blue line being the upper resistance line of a symmetrical triangle pattern. Initially, it looked like a false break of this support somewhere around 513, squeezed back up, fell down again and got below this main support line that goes way back. You have to go all the way back to January of 2023 to even see that support line. But if we go back to the 4-hour time frame and we look at a cleaner chart, we can see we have this distinct downtrend line. We had a downtrend line here as well that already broke, and this potentially could be interpreted as a double bottom here. We essentially had an equal bottom. When we hop over to SPY, we can see that SPY had a slightly higher low though, so that's a bullish sign for the overall market. But going back to QQQ, really the thing that's on my mind right now, what I'm watching, is if this is a legitimate descending channel, starting here from December 16th, possibly even going back to December 10th and going on down, if this could be considered an outlier, then we should see a very strong selling pressure coming in right around 524 tomorrow if we get that high. And on SPY, the level we'd be looking for is around 598, give or take. If that acts as strong resistance, we could actually see the market get pushed back down again. And if that happens, what we may actually see forming on SPY is a bit of an extended symmetrical triangle going all the way out here, multiple weeks. Whereas on QQQ, we could basically see a descending triangle forming with this upper resistance line here continuing down and this main support line here, which, by the way, if we go back to Thursday the 2nd, we can see this period of consolidation here. This could be considered a bear flag, in which case it would have taken it significantly lower. But if we take a measured move from here to here, and this turns out to be a reversal pattern, which it obviously did off of this key level here, the measured move there was telling us that QQQ was at least going to go back up to 514 minimum. The significance of this level that we bounced from can't be overstated because it goes all the way back to July of 2024 when we had this big sell-off leading into August 5th. And if you had been paying attention to the VIX, you actually would have noticed this rising wedge on fear that was forming into the end of the day. And that would have been your cue that fear was about to tip over to the downside at the same time that we were hitting a very strong support level on QQQ. Even SPY was near the bottom support line of what I call like an ugly channel because we had price break below and above it a few times, but otherwise it was pretty well defined. And there was a very high likelihood that the selling pressure near the end of the year was over and people were ready to buy the dip. So what does this mean for the markets moving forward? Well, like I said before, if this is a symmetrical triangle and we had a false break to the downside, which a lot of times they do, notice how this is converging right around January 10th. And what happens on that date? Non-farm payrolls. But there's something that's happening on the ADD, the market breadth indicator, that's really interesting to me. I previously pointed out this descending channel here in orange, and I even said, could this potentially be a bull flag? And right now we can see we got up, came down, came back up again, basically double topped, treated previous resistance as support and then pushed up again. But what's interesting about where we double topped is that there was a previous ascending channel that the overall market was in. So we basically hit the previous support line of that now treated it as resistance. If these lines continue to hold significance, what we could actually see happening is a megaphone pattern where the market comes up to resistance, comes way back down to support, comes way back up to resistance, way back down to support. And if that's the case, we're going to see a lot of volatility coming into the markets into the coming weeks, which makes sense in light of the upcoming inauguration. And if anybody is curious what they missed out on Friday, taking a look at the QQQ 1DTE 513 strike calls, if you had bought those the previous day in that consolidation period, you could have paid somewhere about $80 to about $100. And if you had held to the market peak on Friday, they went from about $100 to over $600 a piece. So those could have been straight gains, or it could have been a great way to hedge a short portfolio. So for anybody who's wanting exact numbers, when we look at QQQ, QQQ could come up and it could touch around 524, 522, possibly even 521, depending on where it hits. That would be resistance. And if this lower support line is no longer valid, what we could see is this could act as support somewhere around 518.60, 519.90, 519.25, or this main support line down here, we could be looking at about 513 up to somewhere around 515, 516. This all depends on where it hits. If this doesn't hold, if this resistance line holds up as resistance and forces this back down, and this is a legitimate channel, we could see it come back down again and retest somewhere around 505.25, give or take. And if that holds up, it could push it back up here again to like 519, on and on. And then, of course, for SPY could push up to somewhere around 597 to 596, could push back down. If this now acts as support, it could come back down to around 582 to 583. And then we have a really strong support level down here if it were to get all the way down there, around 576 to 577. Let's keep moving on to the IWM for small caps. We have this well-defined ascending channel here in orange. For a little while there, it was inside of this shorter-term ascending channel in blue. Then we broke below that support. We got very close to the lower support line here, somewhere around 216. And currently appear to be in this little mini channel right now, just bouncing back and forth, back and forth. One could consider this as bullish consolidation, in which case, if it is, if the bulls can break through this upper resistance line somewhere around 226 to 227 and get through this supply zone, then in the coming weeks, we could see IWM try to head back up to around 250 a share. And alternatively, if we break this support line here around 219, the lower support line of the main ascending channel is right around 216.75 to 217. Now, if that were to break, there still is this demand zone that goes from about 209 all the way up to about 215 that small caps would have to push down through before getting further downside. Now, I want to give an update on Dixie, the dollar strength index. While reviewing the charts, I noticed this ascending channel that goes back to the breakout of September 30th, and it's pretty well defined. So right now we're near the lower support line of it, but right above it is a supply zone as well. If you remember this massive falling wedge that I covered in previous videos, the breakout target for that is right around 112, which goes right up into the supply zone. So bullishness for the dollar may not quite be over yet. And I know it looks messy, but just pay attention to the yellow lines here. We had this descending triangle on the RSI. This is on the daily time frame. We broke out, came back down, touched the previous resistance line, treated it as support, made another descending triangle, and pushed up again. So this does look like late cycle, but I definitely think that Dixie has some more gas in the tank before it actually breaks this line. Now, I am keeping in mind this main resistance line right here. If we get up there right around 109.90 all the way up to about 110.30, we're going to meet some heavy resistance there. But I could definitely see an instance where Dixie falls back for maybe a day or two, then hits this main support line, and then it makes the markets go red again. And just quickly hopping back over to QQQ, I have to mention, this is on the 4 hour, the RSI is already almost overbought. And I don't think it's just a coincidence that it's getting overbought, getting close to this resistance at the same time that Dixie is getting close to support. So there's more confluence for that volatility that I'm talking about. We're going to do updated analysis on all of the Mag 7 stocks, but before we do, I'm going to go over SoFi as a requested ticker, as well as silver. So zooming way out on SoFi on the weekly time frame, we can see here that we had a demand/supply zone, depending on which side of it you were getting into, going from about $13 a share up to about $17.60 to $17.70. If we throw up our indicators on the daily time frame, we can see that right now the Bollinger Bands here in this kind of light blue are squeezing, indicating that it's either about to shoot up like a rocket or it's about to shoot back down, because technically it is in a supply zone right now. Notice also on the daily time frame, we're below the baseline of the Ichimoku cloud, but we're above the Ichimoku cloud support on the daily time frame. We're resting on the 50-day simple moving average, and we're well above the 100 and the 200 daily simple moving averages. And if you hadn't spotted it yet, there does seem to be a falling wedge pattern that's forming on SoFi. And if we take a measured move for that from here to here, we can see that depending on where we break out, it could come up to somewhere around $18.20. If we break out even earlier, it might come up to around $19 a share. It depends on where it breaks out, if it breaks out to the upside. And we are above support right now. So that's a definite possibility. And then just zooming back out to the weekly time frame again, as we can see, if we can get above this supply zone, the next major resistance isn't until about $24.50. Alternatively though, if we actually break to the downside with this pattern, it's targeting somewhere around like $10.50 to $10.70, which is a key support area. It's been a little while since we've taken a look at silver, but right now we have a similar looking falling wedge on the weekly time frame. And depending on where this breaks out, it could break out and hit this previous main resistance line somewhere around $31 a share. Or if it were to break out sooner, it could actually break above that main resistance line and go all the way up to about $32 a share. And it definitely does look like on the weekly RSI that we're getting a bit of an RSI double bottom there. And as I shared in previous videos, if this giant symmetrical triangle is actually playing out, then over the course of multiple years, we would expect to see silver to come all the way up to probably about $63 to $64 a share. We're breaking into our analysis on the Mag 7, but if you're getting value out of this video so far, please make sure to like, share, and subscribe. And tap those notifications or follow me on social, either on StockTwits or X, so you don't miss these market moving updates. So seemingly everybody and their mom has been talking about this supposed head and shoulders pattern on NVIDIA, which obviously has now been invalidated. But what I'm seeing is actually looking more like inverted head and shoulders pattern, where we've got the left side here, the head here, and the right side here. This upper resistance line being the main neckline for it, which we appear to have now broken. If that's accurate, that's indicating that NVIDIA is targeting somewhere around $157 a share. And that really should come as no surprise if you remember the symmetrical triangle pattern that I covered before, that was indicating that NVIDIA could come all the way up to about $168 to $169 per share. We hit this main support line here, and as we have every single time we've hit it before, we bounced very sharply off of it. And you can see we had this clearly defined, basically like a triple bottom pattern here, followed by another triple bottom there, and then we broke that resistance. Now, didn't I say this potentially could be a bull flag rather than a descending channel that finally breaks the support line? And I even shared this on the weekly time frame on the RSI. We have what looks like a falling wedge pattern on the RSI on strength, and we're right up at resistance again for strength. So could we see a sharp pullback? There's the potential for that. But if this decides to break out to the upside, I think the bears are really about to get caught off guard if so. Looking at Meta, before I had covered what looked like nested symmetrical triangle patterns where we had one here, it looked like we got a false break below it and then a push back up, and then a much larger symmetrical triangle with much more significant support and resistance lines. Now, if this smaller symmetrical triangle pattern is legitimate and we take that measured move and we move it back down to where it bottomed from, that would indicate that Meta is headed up to somewhere around $624 a share, which obviously would break the upper resistance line of this. And if that's the case, then we would expect Meta to eventually head all the way up to around $657 to $658 a share. Now it absolutely has to get above this main resistance line right around 609, but if it can, it can be very bullish. However, as I always say, resistance is resistance until it's broken, and vice versa for support. So on this symmetrical triangle, Meta would have to get above about 613 to see further upside, or otherwise it could come back down and retest previous support somewhere around 594 all the way up to like 597, 598. Congratulations to anybody who caught Microsoft when it hit this support level right around 415 even. It's in this very well-defined ascending channel here in yellow, and I previously said if it comes down here and the support holds, it could be a very great buying opportunity. So if Microsoft can get through this supply zone somewhere between 425 to 430 and get back above this main resistance line right around 435, if, and it obviously is a very big if, it can push back up to the upper resistance line of this channel, we could see Microsoft coming all the way back up to about 460 a share. Now, alternatively, if this turns out to just be a dead cat bounce and the market continues to move back down, we could see Microsoft come back down to this previous demand zone somewhere between like 400 even up to about 407 a share. Taking a look at Tesla on the 4-hour time frame, we had this well-defined symmetrical triangle pattern that I previously pointed out. We had a breakout down here. We pulled back up to somewhere right around 428. And from there, the breakdown target was somewhere around $355 a share if this is a legitimate pattern. Now, obviously, we didn't hit that pattern target completely, and we have more than retraced this big move down. But notice how we're still below this very strong resistance level right around 414 to 415. If we can't break that, that could potentially still act as strong resistance, forcing this back down further. And notice even on the 4-hour RSI, if we draw this resistance trend line here, if this acts as strong resistance here when the RSI gets around 74 to 75, which technically is overbought, that's adding more confluence to potentially see Tesla continue to go back down. And this area is a very strong level of liquidity, so there always is the potential it's going back down to grab more liquidity before continuing further down. Now, alternatively, if we take this measured move and we move it down to where it's bottomed from, if this breaks that resistance line and continues back up, we could see Tesla coming back up to about $445 to $446 a share, basically filling this whole gap. I mean, personally, I would still rather see it fulfill this pattern target, taking it right down to about 355, which also happens to be a very strong support level and could be a really great buying opportunity. As we've been covering for weeks, we have this main upper resistance line on Apple, and we hit just above it, or just wicked right above it, up to 260 and then rejected off of it. But again, notice this RSI pattern. We had the upper resistance line and the lower support line. Apple is already very close to the lower support line on strength. If we zoom into the 4-hour time frame, as you can see, we've already filled this daily fair value gap here between somewhere around 244.65 up to roughly about 245.34. And there's a demand zone right here that we're basically resting on. And this little resistance line is the main one that I'm watching. We are in demand. We're getting oversold. I absolutely could see Apple break out from here and try to fill this gap at least up to about $250 a share. So if you've been shorting Apple, you have to remember that markets do not move in straight lines. They move in wiggles. So I definitely think this potentially could be a good take profit area if you're shorting Apple, unless you're holding long term. Now, if you're curious about longer term potential downside targets, please check out my previous videos where I go over that more in depth. Taking a look at Amazon on the 4-hour time frame, remember it's in this well-defined ascending channel here in yellow, and there does appear to have been a symmetrical triangle. We obviously broke below the support line of that symmetrical triangle. We even broke briefly before the main support line of this ascending channel came all the way down to about $218 a share and then pushed back up. So if we take that measured move and we move it down to where it's bottomed from, this is indicating that Amazon, at least off of this pattern, could come back all the way up to about $233 to $234 a share, breaking the previous all-time high. And I have to zoom way out on the daily time frame to even show it, but if anybody's curious, the upper resistance line of this ascending channel wouldn't be hit until around basically $250 a share. Quickly looking at Google, we can see that the same thing has happened. We broke below the main support line of the symmetrical triangle. And if we take the measure move from where it's bottomed, it's indicating that Google could come all the way back up to about $204 a share. Again, breaking previous all-time high. And if you remember, I shared in a previous video, if this giant symmetrical triangle plays out, we could actually see Google come all the way up to about $222 to $223 a share. Something I want to point out real quickly on the daily time frame for Google, we can see we actually have a hidden bullish divergence here where the RSI made a lower low, but price made a higher low. And if we switch over to Amazon, we can see the same thing. RSI made a lower low, whereas price made basically an equal low. And as I always say, whenever you have hidden bullish divergence, a lot of times it's followed by a pretty strong bounce, followed by further downside. It typically is an indication that the bulls are getting kind of tired. And I think we're seeing hidden bullish divergence along multiple tickers. Although things seem to be getting overbought on the 4-hour time frame, if we zoom out to the daily, we can see that there's potentially a lot more upside if the market decides to get very bullish and break through all of this resistance. And as I've shared on all those Mag 7 stocks, a lot of them have upside targets that still haven't been met yet. And as much as big tech is moving the markets, if those complete their targets to the upside, I think it's going to be a very hard time for the bears. But that said, it doesn't mean that we shouldn't always have tail risk hedges on as well. I'm about to share this week's trading rule to live by, but I just ask, please, if you're really getting value out of this channel, make sure that you subscribed, like for the algo. Best of luck, cool cats, and God bless.